Hey guys, how is it going today? Oh, Omisego, I'm so done with Omisego. So, if you guys didn't catch the vibe from that song that I just made up, I'm done with Omisego for short term. I accumulated quite a bit between $4 to $5 for long term in my portfolio, and I'm just going to hold that. I'm extremely disappointed with the news, and the market has entirely spoken with a shooting star for Omisego. So there's no way I'm going to be day trading it for a while. Market sentiment is extremely bearish right now. Now, Jun basically fluffed up his first blog, um, announcing to the public that he'll release something near the end of this week, which he did, but it made it sound like he was going to release the wallet SDK or have a lot more information on that. And the DEX sounded like there was going to be more news in terms of announcement for partnerships, but nothing like that came up. The DEX is the decentralized exchange, so you guys know, but nothing came out that even detailed a roadmap close to it. It sounded like he was too busy for his 25th anniversary, and he just was like, fuck, I forgot about it. I'm just gonna write a blog on it instead. So the market was like, what the fuck is going on there, John? Man, this lady boy from Thailand, what the heck is he doing? I'm from Thailand. I can say that perfectly fine. But that's what it sounded like he was doing, guys. Like he just released a blog instead. So the market was incredibly disappointed. The price dropped dramatically. Like it tanked, we're talking about. So I'm just gonna hold my, whatever thousand I have with me to go, and I'm just gonna sell it when it gets to $14 again. And now I want to look for some new day trading setups. And I do firmly believe that ETP is one of those extremely undervalued coins right now, and we should be looking at it. So let's look at ETP, gentlemen. ETP coin market cap. ETP Metaverse, okay? It has a circulating supply of only 22 million right now. It has a max supply of about 100 million, but we won't worry about that right now. It's got really good volume for 24 hours with Bitfinex leading the way. 8 million volume in 24 hours, 85 million market cap, ranked pretty high right now. And all that I'm waiting for is for it to hit Poloniex. It should hit Poloniex in a few months, I'm guessing. They usually pick up a lot of coins that Bitfinex picks up. And if we learn one thing from, for example, Omisego, let's show you guys what happened when Omisego hit the market there. I remember the date very well. It was September 11. How could we forget that day unless we forget? So it was on its way to making a head and shoulders pattern already. Okay, it was doing this, and then it was about to do this right here, but it kind of skipped it. See, it was doing this right here, and then it was about to do this right here, but this area right here on September 11, see on the bottom where it says September 11 there, that is the time that it was added to Poloniex, and it spiked up there. Then it continued the downtrend. As soon as it adds to Poloniex, we're going to see a massive jump. Like if OMG was any indication, it shot up 25% about in one single day because it was added to Poloniex. So not only that, it's got a really good team as well, guys. It's incredibly undervalued. It has, I won't get into all the fundamental analysis of it because I'm a technical analyst and that's how I trade, with a little bit of FA combined to it as well. So it has lots of potential. You guys should check out the use cases for it, learn a little bit more about the coin itself from a fundamental analysis side, get to know the developers. But I do think it has the potential to be like a Neo in terms of price range, like $20–30 price range, just combining it with the team and the circulating supply as well, and just the general market sentiment. So let's get started with Elliott Wave. I want to draw this one first of all. 1, 2, 3, 4. Whoops, I didn't draw that right. 1, 2, 3, 4, and 5. Okay. So does wave 4 retrace to wave 1 territory? No, it does not. And here we have a bunch of different subwaves inside of here, which is perfectly fine as well. We have 5 subwaves in here. Let me just draw it for you guys to make it more clear. 1, 2, and I'll just draw it like that one here. 3, 4, and 5. Okay. So we basically have 5 waves within that subwave as well. And what is this hot mess right here? So the first thing that I always recommend for people to do is to draw a trend line to identify your supports and resistances. Right now, we are on a 4-hour chart, okay guys? On a 4-hour chart. Now, what are some other key major areas here? I'd say that's one major key area. I'd say that's another one, and right over here as well. So I'm going to draw a horizontal line where I think some key areas are, which is basically right here. Now, the third thing I'm going to do is draw even more lines that I think are some key areas. Would you guys agree that this point is? Would you agree that this point is? And would you agree that this point is as well? Of course you guys would. It's hard to debate that, right? So we're just going to do it something like this, right through here. Now, what do we notice first of all? Well, we notice that this is an intersecting point. We notice that this is kind of looking like a channel right now coming down, right? Now, let's confirm some things. Fibonacci is a really strong tool. It tells us exactly where resistance and supports are. So let's take a look right now. What we do notice right away, guys, is that while we have lots of stalls, okay? We had one stall right here overall at the 0.5 fib level and right here as well. So pretty cool, right? And not only that, this line that I drew, it's right around the 0.5 Fibonacci level, isn't it? Hard to disagree with that, right? And now we also see that at the 382 level right here, it was met with resistance, right? Definitely was met with resistance. So I'm going to draw this a little bit better. So check this out. See where it says 382, one resistance area there, or support I meant, and support right here as well, okay? So pretty strong areas. And the 0.5, we have some resistance there, or support rather. When I say resistance, I mean it has trouble breaking it. That's all that I mean. I don't mean an actual resistance point. We had some trouble here, and we had some trouble there as well, right? So looking pretty good so far. Now let's draw some even more lines coming in, okay? We're gonna draw one, say, from here to here. We're gonna draw more lines as well, say from here to here. What do you guys notice? You notice that it becomes kind of a falling wedge, right? If I just blow through it right here and take this angle, so I'm taking a few different ones. This one right here is taking this major support line right here, which creates the channel. This one right here, the whatever blue one, that one is creating a wedge, right? So we kind of have a wedge right now within that. So I do think, actually, you know what? I think I'm drawing it wrong. We're going to delete this guy right here. We're going to delete that guy entirely, ignore that I've even said it, and we're just going to focus on this one right here. On this one right here, and we're going to draw it to the top right there where we see it. So one resistance point, second support point, and we also see this right here that now makes a channel, right? Now, how do we know that it's making a channel? Well, let's draw our ABC correction wave. So it went down to right here. That's A, this is B, and this is C, right guys? So for every impulse wave up, there is usually an ABC correction. This one just happens to be a really good one. But what is the rest of everything right here? Well, this is an WXY pattern, which I would draw for you guys right here. So that's one. It's two. We should probably get another one up here somewhere, I'm guessing. Somewhere right up here. Okay, now check this out. If I actually clone this and I moved it to right here, isn't that kind of crazy how this line meets that one right there? Scary, isn't it, guys? Now let's say I cloned it again and I brought it over to here. Where's this one from? This one's from right here. Notice how similar they are? Perfect symmetry, right? Or geometry rather. This one's perfect as well. Now, why wouldn't this one be pretty damn similar? Wouldn't you guys agree? Not only that, This one actually intersects right here at this point, the 618. So let's assume a few things, because trading is all about assumptions, right? What we want to do is we want to find a lot of assumptions. So let's say you're flipping a coin, 50-50, right? Well, there's only a 50-50 chance, but in trading, 50-50 as well, 50 chance to go up, 50 chance to go down, we'll just say. But what we try to do is try to find information on why it might lean one way more than the other way, right? And this way it starts to weigh out more towards one side. So let's talk about this. We have two main supports here at 382. One area and then two area right here, right? Now, if it's stalled at the 382 level, can we also assume that it might possibly stall at the 0.5 level as well? Yes, it's a fairly safe assumption that we can make. Once here, twice there, right? That's pretty strong. Not only that, it had trouble around the overall 0.5 level right here, and right here. We don't know that in hindsight. Like, let's say only all of this developed, we wouldn't know until much later. But now we can conclude that yes, sure, it did have trouble stalling right here. And my position is actually at 375 exactly right here. And I'm going to pause this video and show you guys something on the 3-hour chart, okay? Sorry about that, I just needed to open up another chart. I wanted to show you guys that on a 3-hour chart right here, guys, it is extremely oversold. Wouldn't you agree with me? Pretty oversold, right? Yeah, it's hard to disagree because right now it's like in under 30 right now. So yeah. So looking back on our 4-hour chart, we can also assume that it will have a lot of trouble right here as well at the 0.5 level. I mean, look at it, guys. This line right here that I will make purple intersecting with this first purple line right here, that's kind of a wedge that it's making, right, guys? Or even more clear, if I were to do it, if I were to draw it something like here and just went through these lines, actually even right here, this bottom one right here, using this point, it's wedging into this area. Maybe it'll get to 3.4, but not likely because this is a 0.5 Fibonacci level, right? So we always have to make assumptions. And I'm going to go over it again with you guys just to make sure that you really understand what I'm saying. Okay, we stalled at the 382 level. Okay, so we will and should also stall as well at this level right here. We randomly drew some support lines, even though before we saw it. We drew one from here because this was a big area, here as well, and here, okay? And it also happens to coincidentally connect to right here. We draw a big support line or resistance support, however you look at it, from this point here, from this here, and these are basically bear trap areas, which I do not count, all right? I will not count it because they're bear trap areas and it breaks out of the channel temporarily. It would not be cool to draw a channel from here down, like what I'm saying is here, because there's not as many relevant points, right? Here it meets a lot of relevant points, and I'm going to circle it for you guys. There, here where it's stalling, here as well, okay? And it happens to also be the 0.5 Fibonacci level. So you know from that, it's a critical point. And what we call these are apex points, okay? Apex points is where key points will meet. And I didn't even know it was going to form this, but that's a thing of beauty. On a 4-hour chart, we're getting a doji already, guys. And I'm going to show you guys what a doji reversal is. Every time you see a doji, when it is going up, it means that it will start to come down. If you guys see a doji over here, for example, right, like right there on a downtrend, heck, you guys can count on it going up afterwards. I didn't know it was going to form. This happened to be incredibly coincidental that it's forming the slightest and tiniest doji. And that's what reversals are. Right now it's looking a little bit bigger, but it's getting met with resistance right away. The general public has spoken that they believe that this key area, and I'm sure there are a lot of analysts out there who are seeing what I'm seeing, they're all going to agree that this is a key area because it's at the 0.5 Fibonacci level. And just based on the market sentiment that this is a really popular coin right now, good chance it's going to go up. Now let's get into what this area is. So every time there's an impulse up, there's always going to be an A, B, C correction. Now I'm an Elliott Wave trader. I live and I swear by it. And sometimes you'll catch me doing 6 hours of analysis on one simple coin before I enter. Now I want to firmly say that the amount of work that you put in is directly proportional to how much income you can make into this drop. Okay, those who will ask things like, when should I buy, when should I sell, what is my stop loss, what's a good coin to look at, those are not really the best questions to be asking, right? Better questions to ask is, hey, I'm thinking of entering at $3.70. Do you think that that's a good idea? And then we have to answer it by logic and lots of reasoning. Okay, so trading is a game of probability, which I will get into with you guys as soon as we are done figuring out this hot mess. So after a 5-wave impulse up like that, which is basically the primary wave 1, we will have an ABC correction. Now this C usually goes much lower, but it did not. And it did not because this is what we call a truncated C, okay? A truncated C wave. What is a truncated C wave? Truncated C wave means that it does not really retrace lower than A. And we can clearly see that this is A because it's the lowest point before it started uptrending. And here we can know it's B because it's a higher high than all of these ones that we see. And here we know it's a C as well because we know that this is the next lowest point. Now where's the next highest point? Obviously here. Where's the next lowest point? Obviously here. These are things that we only see in hindsight, guys. We see it in hindsight once it has already been done. But what is the rest? I will show you guys what it is. This is a W. We now are getting something called a double zigzag pattern or a double Elliott wave combo. Okay, here they might call it something else. They might call it, there you go, they call it an Elliott double wave combo right here. Okay, do you guys see it right here? And actually I'll draw it in here for you. I'll start from right there. I'll go to right here and I'll go up to here and I will go up to here after. That's basically what it is. It's a little bit messy because they need to fix this shit. Because when it overlaps like that, it just looks really ugly, You know what? I'm such a perfectionist that I cannot do like that. I will do it properly. W, X, X, and Y. Now, what are all these in here then? Right? What's this structure right here? Well, within the wave X to wave Y, this is now another ABC, guys. Cool, right? This is another A. This is another B. And this is another C. Oh my God. It's kind of irritating sometimes. C. Okay? Does that make sense to you guys? Whoa, it just literally disappeared on me. What the fuck? Okay, look at this. So how many waves do we have in an ABC? Count with me. We have, for A, we have 1, 1, and 1. So we have 3. But how many do we have for W, X, and Y? We actually should have 7. 1, 2, 3, 4, 5, 6, and 7. Right, gentlemen? And if you guys notice, for every time we go up, we have 3. Every time we go down, we have 5. Okay? That's important to distinguish every time. And I'm going to draw it out in a different color for you guys. For example, we have 1, 2, 3, 4, and 5. And then going up, we have 1, 2, 3, right? Here we don't see it because it's too zoomed in, but if I went on like a 30-minute chart, you guys will see that one better. 1, 2, basically 3, 4, and 5, okay? Do you guys see what I mean? So it's hard to see it right there because we're still zoomed in, but it's there. This one we also have an A, B, and C right in here. And then this one coming down, we should have 5 as well. So this is one area, this is 2, this is 3, and check that out, this is 4, and we're just about to make 5. Now there's a chance that this one could be long, and it could come down to all the way to the $2 range before making up there, but it's also extremely slim because usually the wave 5 is the smallest one. If you guys saw me draw, for example, this one, right here, this is the wave 5. It's obviously smaller in price action than this one here. That's wave 3 right here. Obviously it's way smaller. Now can we confirm that with other ones? Look at this one right here, wave 5 that I drew. It's way smaller as well. So if those are the 5 coming down here, could this one be it? Damn right it can be. So what can we expect next? Well, we have this clear channel that I've labeled here, right? This big channel here, which I'll actually make this one purple. See that purple channel? Yes, you guys do. You see the channel. Now, this one coming up, what I am expecting is a simple A, B, C correction again. A, B, C. And then I should expect 5 waves coming down here again. 1, 2, 3, 4, and probably a small one. And where will this one end up being? This one will end up getting to about right here, where the 0.6 Fibonacci level is. That is exactly what I am expecting to happen. I expect it to hit this B right here, and then I will short this bastard all the way to $2, $3. This is just a rough target. Now that we've identified Elliott Wave and the structures that it's making, we need to talk about probability. Okay, gentlemen? Probability. So, you guys have a buddy, and the buddy says to you, let's flip a loonie. Okay, guys? You're working with $1 here. Let's flip a loonie, and if you win, I'm going to give you 50 cents. But if you lose, you have to give me 50 cents, right? What's 50 cents divided by 50 cents? That's 1, okay? That's your risk to reward. It's also equal to 1 to 1. Makes sense? Right? That's your risk to reward, which is just equal to 1. Okay? Now, if your buddy said to you, you know what? Let's flip a coin. Heads or tails. If you win, I'm going to give you $1. But if you lose, you have to give me $2. Now, what does that equal? What's the ratio? It's 1 to 2. So now your risk to reward is 0.5. Does that make sense? It makes sense a lot to me. I hope it makes sense to you guys. Now, let's see a few more cases. Okay, your buddy says to you, hey, let's flip a coin again. But if you win, I'm going to give you $1. But if you lose, you only have to give me 50 cents. So what does that equal, guys? That equals 2 to 1, right? Because $1 divided by 0.5 is 2, right? So this is now equal to a risk reward of 2. Now, let's say another case. He says to you, you know what? I'm feeling really freaking generous right now. Let's flip a coin, heads or tails. And if you win, I'm going to give you $3, right? But if you lose, you only have to give me $1. That equals obviously 3 times more, which is equals to 3, right? Now, what is 3 divided by 1, guys? Or 1 divided by 3? It's 0.333, right? Right? It's actually, just on another note here, it's 0.33333, right? Now, let's say that you lost your first one, guys. Let's say you lost your first one, and you lost $1. You have to give you $1, okay? How many times would you have to win for you to just make up that $1? right? You only have to win one time, obviously. But now let's say you lost twice in a row, okay? Twice in a row, and you're actually down $2 now, right? Because every time you have to give him $1 every time you lost. How many times again would you have to win to make up that loss? Just one again, because you're every time you win $3, okay? Right? So even if you won one time out of 3 possible games, you're actually still up $1. Does that make sense, guys? Now, let's say you lost 3 times in a row. You lost 3 times in a row, and how much does that equal each time? That's $1 times 3. It's equal to $3, right? Does that make sense? You're playing heads and tails, flipping a coin, and then you lost 3 times in a row. And every time you lose, you have to give your buddy $1. So out of 3 games, you've actually lost $3 total. Now, what happens if you win on the 4th one, okay? Now, the 4th game that you're playing, okay, now game 4, you lost $3 already. Does that make sense? Now, if you won only one time, how much do you win? So one win is equal to $3, okay? Right? So now, sorry. So game 3, you've lost $3. But game 4, you win $3, right? Does that make sense? So the first 3 games that you've played, you have lost $1 on each game. But all of a sudden, heads or tails, on the 4th one, you won. And then your buddy gives you $3. So how much have you lost or won? You actually broke out even. So based on that simple math, out of 4 games, with a risk reward of 3-to-1, you only need to win 1 game to break even. Assuming it's the same amount of money that you're playing every time. Does this make sense to you guys? This is how we trade. We trade using probability and risk to reward, okay? That is how we trade, risk to reward every single time, so we can try to be profitable. Now, let's see what my risk reward is for this badass right here. I'm going to go into a long position, or not I'm going to, I have gone into a long position. I have gone into a long position at about 375. Now, where are my possible targets? Well, like I mentioned, look at the symmetry between this line and this one. It's freaking identical almost. Look at the symmetry between some of these ones too, right? They're very identical coming down as well. Look at the symmetry between this one especially. If I move this one over to right here, holy crap, is that similar, guys? If I just cloned it and moved it over down to right here, it's almost like a match made in heaven. And that's the exact same thing that I did over here as well. I just cloned it and I moved it down to right here, okay? Now, my stop loss is gonna be probably right slightly below it, okay? Now, what is my risk to reward for this guy? Putting my mouse over it, you see my risk to reward ratio is 4.18. Now, how did they come up with this number? Well, they're taking this number up here, which is about 4.6 minus my entry price, which was what, guys? It was 3.75. And then they're dividing it, all of this, for those that know fractions, they're dividing it by the price on the bottom, which is my entry price minus my stop loss. And my stop loss is roughly, say, 355. That's what they're doing. They're just taking 4.6 minus 3.75 divided by the difference between 3.75 to 0.5, okay? And we're just gonna do the math for you guys so you can get it. All right, so the bottom one is obviously 0.2, 4.6 minus 3.75 divided by 0.2, 4.25, guys. That is what my risk to reward is. So let's say it's just 4 to 1, for example, okay? Let's say it's 4 to 1, and we're doing the flipping a coin thing again, okay? So 4 to 1 ratio, okay? Now, let's say I won, heck, let's say I lost 4 times in a row. How much have I lost, guys? If your buddy says, let's flip a coin, and every time you lose, you have to give $1. So if I lost 4 times in a row, that would be equal to a $4 loss, right? Right? But because it's a 4 to 1 ratio, and I'm winning $4 for every time I win one time, I only have to win one time to break even. Does that make sense? Because I'll have won $4. So this, if I lose 4 times and I win one time, I break even. And how many games is that total, guys? That's 5 games total, right? Is that possible? Winning 1 out of 5 games? Yeah, I think I can win 20% of the time. But let's say you won 50% of the time, okay? If you won 50% of the time out of 100 games, okay? 100 games total, and I lost 50 games, and won 50 games, okay? My total loss will be $50 because I'm losing $1 each time, right? But if I won 50 games and I'm winning $4 each time, I'm actually winning $200 total. Well, 200 minus 50 is equal to a $150 profit. Does that make sense to you guys? This is how we trade like a casino using probability. Heck, we don't have to win them all. Fuck winning them all. All that matters is we win the majority of time, okay? Let's even use a different scenario, guys. Let's say we stuck to something like a 2 to 1 ratio, okay? 2 to 1 ratio, okay? And every time we win one, we will win $2. Every win equals $2, and every loss equals $1, okay? Does that make sense? Now, let's say we go 100 games total. All right, guys? 50%, actually, let's say we have a 60% win rate and a 40% lose rate. 60% win rate, and we have a 40% losing rate, okay? Well, for the losing one, how much would we lose, guys, if we lost $1 each time? We would lose $40, right? But let's say, how much do we win out of 60 games if we won $1 each time? We'd win $60, okay? Does that make sense? So out of 100 games, how much money have you actually made? You profited $20 profit, okay, guys? Now, this is, once again, to show you guys just simple probabilities that we use while trading. And we try to have the highest risk to reward ratios all the time because we want to focus on winning over time. Now, it doesn't matter if you guys lose a few trades over here and there. That is honestly what amateurs worry about. They worry about winning every single trade and they cannot handle loses. But me, I don't give a fuck if I lose, because I know that over time with a solid strategy, I'm always going to win over time. And you guys really need to understand this concept of risk management, okay? Now, the trade that I have entered, firstly, let's think of this, okay, guys? Do you guys think that this is a good enough of a reason to enter a trade and take a chance? 1, we have a clear channel coming down here. 2, we have completed 5 waves, okay? This is XYZ correction. This is A coming down that is now officially completed based on wave counting, right? It's also 0.5 Fibonacci level. It's also this major support line that we have drawn even before we saw it. Now, is that a good enough reason to enter a trade? Damn right it is. We have to take the chances every single time we see a good trade. Now, if my risk to reward was 4.21 right here, and I showed you guys earlier that I lost $1 for every time I traded, well, if out of 4 games, if I lost, I would be losing $4. But if I only won one game, guys, I would win $4, and that would actually make up for all the losses. And that would mean I would have to be a pretty shitty trader to win 1 out of 5 trades, which is only 20%. Now, if you took a risk-reward ratio, once again, of 4 to 1, and I even won 60% of the time, what would it be, okay? So 4 to 1, each loss is equal to, we'll say $100, okay? And each win is equal to $400, right? Out of 100 games, you guys following me up there, right? Let's say you had a 50% win and 50% loss. So 50 wins is equal to 100 times 50, which is equal to $5,000, right? Now, sorry, 50 losses, I meant to say. 50 losses. Now, 50 wins, each time I win, it's 400 times 50, that's equals to 20 grand, guys. My profit is equal to $20,000 minus $5,000. Okay, what's that equal to? That's equal to $15,000, guys. I am still way so fucking ahead. Do you guys sort of understand where I'm getting with this? Now, let's say that you only took win-loss ratios of $2, okay, or 2 to 1. So instead of winning $400 each time, you win $200 each time. And using the exact same math, right? Out of 50 games, if I lost 100 each time, I'd be losing 5 grand. But out of 50 losses, and I lost 100 each time, out of 50 games, I'd be losing 5 grand. But 50 wins, I'd win $200 each time. So I'd actually be profiting over 100 games, 10 grand. So what is my profit? My profit is, I opened a bunch of shit. My profit is now 5 grand. $5,000, guys. This is how, I'm gonna say it again, and I'm gonna keep saying it until you guys really understand it. This is how we win over time. And this is what separates an amateur from a professional trader, okay? You know how in my blog I say, nah, I'm not a professional trader, but obviously we all know that I am, just based on all the formulas that I use and my trade win expectancy over time. I just don't like that title of professional trader because I find it really, like, I don't know. I'm not a white collar kind of guy. I don't like people who wear fucking suits and shit to work, and I don't have to again. I will wear a suit because I want to for a special occasion, not because I have to for work. And I don't know, I don't like titles. It just rubs me the wrong way, when people introduce themselves with some fancy title. I'm just a down-to-earth guy that happens to trade full-time for a living and does it really extremely fucking well. So, and you guys need to understand that this is what professional traders do, guys. They take high probability setups and they evaluate it over time, and they don't give a shit about their losses. As long as they win over 50% of the time and they take high probability trades, this is basically right here in simple math, and there's a lot more to it than that, I assure you, okay guys? Way more to it than that. But this, what I have just showed you, is your win expectancy formula. And I'm gonna write it out for you guys. Win expectancy formula, okay? You take your win percentage, okay? And you times that by your average win each time. So this would be $200, and you subtract that by your loss percentage multiplied by your average loss each time. So what's my win percentage? That's 50% times 200 minus my loss percentage of 50% times 100. And that is equal to $100 minus $50. Okay, because 50% of 200 is obviously 100, and 50% of 100 is $50. So this equals $50 per trade. Make sense? Rewind it and watch this a million times. So if I win $50 per trade over 100 trades times $50 profit, that is a $50 per trade profit, guys. That equals $5,000. okay? So I just wanted to break it down further for you guys with this one that I used. And this one is saying the exact same thing as well. The exact same thing, but it's actually using the official formula of a win expectancy. Now, if you happen to take a trade setup every time of 2 to 1, and you won 50% of the time, and each time $100 is on the line, this is how much you would profit over time. No matter what, it's just math, guys. But obviously our risk to reward changes often, and I'm not going to get into this with you guys until all of my viewers really have a simple grasp on the basics of probability trading, okay? And that is really important for you guys to understand. As much as I want to teach you guys how to read charts and teach you guys trend lines and Elliott Wave and shit like that, the most important thing to take away from every single one of my videos from now on is risk to reward and probability trading, okay guys? And I want to emphasize this again, that the most important skill to have in trading is managing your motherfucking risk, okay guys? Who cares about learning all this advanced shit that I'm teaching you, like Elliott Wave or harmonic patterns and crap like that? It means nothing at all if you guys don't know how to manage your risk. Now, is 4.21 an awesome risk to reward? Fucking right it is. Okay guys, I'm playing a $10,000 position right now, and I have a chance to win 22.68%. And out of the 10,000, I have a chance to win $2,268. And I have a chance to lose only 5%, we'll say, which is only fucking 500 bucks. So am I cool risking $500, or out of 10,000, am I cool with maybe losing $500 for a chance to win $2,000? Yeah, I'm pretty cool with it. If I lost, big whoop. If I lost again, big whoop. That's now losing $1,000, okay? Because that's 2 trades. If I lost 3 trades, big whoop. That's now $1,500, okay? But now on the 4th trade that I make, if I only win that 1 trade, I'm up $2,000, guys. So what's 2,000 minus 1,500? That's $500 profit over 4 games. But what's winning once out of 4 games? 25%, guys. I'm not that shitty of a trader where I'm going to win 50 or 25% of the time. Actually, I am such a picky fucking trader that my win rate over the long run is pretty damn high. You guys saw my scalping videos that I made. My scalping videos, my success rate was over 80-90%, right? And that was right in front of you guys. Now, for longer trades, my win rate is obviously lower. It's more so around 65 to 70% now, but that's still a really fucking good number over time, okay? So this is a phenomenal trade to take right now. It's an awesome price. Like, it's an awesome trade. That's all I can say. And I'm going to stick to it. I mean, we look on lots of charts right now. This one was kind of a doji that formed already, you know. There's still a lot of time into it, okay? We look on a higher time frame, like 4 hours. I have no doubt that this will turn green soon. The RSI is just bottoming out right now as well, okay? It is completely bottomed out here. It's finding strong support. Like, the histogram is slowly just leveling off as well. We look on the 2-hour chart, it's bottoming out. It just looks like it wants to explode, doesn't it, to come upwards. It looks like it wants to do this. I mean, we look on the 1-hour chart as well. I mean, it's finding support here as well, right? Right there. We look on the 45-minute chart. It's slowly uptrending like this, I see, right? I see it going over to the positive soon. Notice this bullish sentiment on the histogram here. This is about to cross over, it looks like. It looks like this just wants to go up, doesn't it, guys? Doesn't it just look like it wants to do that? I mean, look at this, the histogram. So what I'm getting to is, all I can see are more reasons to enter this trade than to not enter the trade. And because it looks like there are way more reasons to enter a trade, you have to take those chances. It doesn't matter if you are right or if you are wrong, because over time, when you have a high risk to reward for like this one at 4.21, there's a good chance that you might lose this one, or sorry, there's a good chance that you might lose 2 of them. But if I lost 2 trades, I would only lose $1,000. Say a $10,000 position, right? And I'm risking 5%. I'm going to lose 500 each time, so that's $1,000 total. But if I win 2 trades, now my win is actually 50% win, right? Lose 2, win 2. But if I win $2,000 each time, guys, out of 2 games total, my profit is obviously 4 grand, and my loss is obviously 1 grand. So what's my profit over 4 trades? It's actually $3,000. So I'm going to conclude this video with, this is an awesome trade to take, 4-to-1, risk to reward. Elliott waves are drawn. This is A, B, C. This is X. Sorry, this is W, that's X, and that's Y. And we have basically, you know, our A, B, that's about to form, and C right here, okay? Now, the only reason this may be wrong is if this was A right here, and this was B, and C is down here, but we know that that's not right either, because this is making a series of a double bottom here. So we know that, okay, I'm gonna erase all of this so you guys know what I'm talking about. So one might argue, well, what if this is A, and this is B, and this is C, right? Let's say this was A, and this was B, and that's C. Nah, that's not likely, guys. That's not likely at all. Because these wave structures are just not really good to me at all in any way. And I don't think that this is an ABC correction like that. I think that this is an A, and that's a B, and that's a C, and this is the W, and that's the X, and that's the Y, making a double zigzag pattern. So I'm going to conclude it by saying, make sure you guys focus on risk management. Make sure you focus on probability trading like I've shown you, and combine that with all the other skill sets that you have already, such as, you know, reading trend lines. If I could suggest some topics to learn, guys, it would be risk management, first of all, like how I'm going to go over in every single video with you guys. And I would suggest learning trend lines, how to identify supports and resistances, how to learn basic patterns, right? Learn what wedges are, learn what symmetric triangles are, learn what falling wedges, rising wedges are, learn what basically a cup and handle is, learn what a head and shoulder is as well. And those are some of the basic things that can help you guys get started with learning how to trade, and especially learn how to read candlesticks as well, okay? Because candlesticks tell a really, really powerful story. And that is definitely one of the most important things to learn as well. So have yourselves a great day, guys. I hope you guys profit over time. And thank you for watching my video and for the love and support. So take it easy, motherfuckers.